The September jobs report absolutely crushed expectations, and with any luck, this might change the trajectory of markets going forward. Let's jump right into it. Hello and welcome back. So the September jobs report came out about 12 hours ago. I wanted to give this a little bit of time, see how the data landed, and then assess from there. The result of that is kind of emerging. The results were an absolute crushing of expectations. The US economy added 254,000 jobs, over 250,000 jobs, and the unemployment rate fell to 4.1%. US labor market added far more jobs than expected in September, while unemployment rate unexpectedly ticked lower, reflecting a stronger picture of the jobs market than Wall Street had expected. Wage growth, important measure for gauging inflation pressures, rose to a 4% year over year from 3.9 annual gain in August. And just as a reminder, strong employment data generally speaks to a strong economy, right? It means that businesses are confident in the economy, therefore they're employing people. It means that people have money because they've got jobs, therefore spending increases. It speaks to stronger investor confidence because, generally speaking, it means that the economy is on a strong footing. And crucially, it generally means that we are at a lower risk of recession, which of course is a big concern on everybody's minds at the moment. A key element of this September jobs report was how that was likely to affect future rate cuts. Stronger jobs data would generally lead us to believe that the likelihood of a bigger rate cut was reduced, and that was indeed reflected in the data. The key question entering Friday's report was whether the data would reflect a significant cooling in the labor market, which could prompt another large Fed interest rate cut. Following the report, markets were pricing in a roughly 5% chance that the Fed cuts interest rates by another 0.5% in November. Remember at FOMC last, that was a historic 50 basis points, 0.5 percentage point rate cut. Very, very strong rate cut for the start of a rate cutting cycle. So the expectation is now roughly a 5%, just a 5% chance that the Fed cuts interest rates by another 0.5% in November, and that is down from a 53% chance seen a week ago. Now again, lower interest rates generally mean that investors pull money out of yield-bearing assets, things like the bond market, and that money goes into so-called risk assets like the stock market, like Bitcoin. Therefore, at a high, basic, dumbed down level, lower interest rates mean higher stock prices, mean higher Bitcoin prices. But as we discussed in my last video on FOMC and the really aggressive 50 basis point rate cut that was put in, very unusual for the start of a cycle. Generally speaking, a rate cutting cycle that begins with such a heavy rate cut early on, historically speaking, those generally lead to recessions. It's almost like that is kind of the last resort that the Fed has to play, the last card that they have to play, and it's kind of the band-aid, like, let's solve this now, last ditch attempt. So that being said, strong employment data beating expectations, although it may lower the chances of further heavy interest rate cuts, it is strong economic data, right? And markets responded accordingly. Also, by the way, port strike fears have subsided as that comes to an end. US port workers and operators reach deal to end coast strike immediately. Tentative deal includes a 62% wage hike over 6 years. And as we can see in the charts, S&P up a little over 1% since the jobs report came out. Bringing this back to crypto, if we take a look at Bitcoin, you can see that we have flipped the new moon sell-off, currently sitting at around $62,000, up from a low of $59,800. This $62,000 range was, of course, the kind of final bastion of support that we broke through towards the beginning of last week on that sharp sell-off. But buying over the last 24 hours has been somewhat sustained, a less volatile market, and we are up quite a bit from lows. If we look over at fear and greed, you can see we're currently sitting at a neutral score of 49, up from an average of 41 yesterday. Also looking at the ETFs, of course, the day hasn't closed, but so far for the fourth, we are up $25.6 million in terms of inflows. That would flip the last 3 days of net outflows, the largest being back on the 1st of October at $242 million, in line with the big slip through this same $62K level. From a technical perspective, we do have some work to put in still if we can flip the $62K level, but it does look like we seem to have bottomed out from this sell-off, at least for now, although that is absolutely not a prediction going forward. But generally speaking, markets feeling a bit more positive across risk assets, and that is reflected even more so in Bitcoin and in crypto. Some more positive news out specific to crypto today. El Salvador doubles down on Bitcoin, defies IMF concerns. So of course, in El Salvador, Bitcoin is in fact legal tender. El Salvador buys 1 Bitcoin every day, and they don't plan on stopping. On October the 4th, Juan Carlos Reyes, president of the National Commission of Digital Assets, announced that the Central American country's lawmakers, that's El Salvador's lawmakers, had passed important amendments to the CNAD law. Our team will combine regulatory knowledge with practical Bitcoin experience, ensuring a balanced and effective approach. At the same time, the National Bitcoin Office of the President of El Salvador stated that the country was building new capital markets on the bellwether digital asset. According to ONBTC, and I absolutely love this, Only on Bitcoin can an individual ever self-custody their wealth and property. Capital will never form upon chains designed for velocity rather than sovereignty. And this expansion of Bitcoin in El Salvador comes in contrast to the IMF, the International Monetary Fund's recommendation. What the IMF has recommended is a narrowing of the scope of Bitcoin law, strengthening the regulatory framework and oversight of the Bitcoin ecosystem, and limiting the public sector exposure to Bitcoin. And of course, the International Monetary Fund doesn't want El Salvador to fully adopt Bitcoin. They don't want the world to fully adopt Bitcoin because it remains absolutely antithetical to the centralized systems of control that they stand for. But El Salvador and El Salvador's government remains unshaken by this and continues to make big steps forward in mass Bitcoin adoption. So to summarize, very, very strong US jobs data, generally speaking bullish for markets, although it does somewhat lower the possibility of further heavy rate cuts going forward. Does it totally rule out the possibility of a recession? No, absolutely not. But it is bullish for markets and it is bullish in the near term. That combined with an end to port strike fears, also bullish for risk assets, also bullish for crypto. With any luck, Uptober might be back in session. As ever, that is not financial advice, just my opinion. Plenty more to come. Catch you in the next one.